And so simply do what the smart money is doing, right? Simply follow the smart investors. And right now, the smart investors are doing the following. They are currently... Hi, in this video we're going to discuss various charts. We've got 6 different charts prepared. They come from the Glassnode Newsletter. So every week Glassnode brings out the Glassnode Insights newsletter. A link to that newsletter is also in the video description down below. Feel free to check that out. In this video we're going to discuss the various data. There's more charts in the newsletter, but here we're going to focus on what I personally think is the most useful of that data, and we're going to discuss how I personally interpret this. So this goes beyond, I'm not a spokesperson of Glassnode. This is simply just what I personally think where Bitcoin might potentially go in the short term as well as in the long term. So let's start off with the 90-day coin days destroyed. Now that's this orange line over here. And what are coin days? What does Glassnode mean with coin days? Coin days are the following. Coin days is a measure of how active a Bitcoin wallet is. So for example, when you've got a Bitcoin in your wallet, right, and you don't move it for every day, you will accrue coin days. So the number of coin days goes up. So you basically have a dormancy measure to some point. Now, this single Bitcoin gets transferred to another wallet, then suddenly the coin days here crash. They go to 0 for that specific wallet. And then the whole cycle repeats again, right? Until another person decides again to transfer those Bitcoins out to another wallet. And so the higher these coin days are in aggregate over all of Bitcoin's network, the more dormant the network is. Or we can look at this the other way around, right? The more coin days get destroyed, as in over here and over here, the more active the network is. And so when we look at this in terms of a 90-day average, that's what we get over here. We see here in 2017, during the first bull run that most of us might still have experienced, we see here in black the price top, right, at around 20K for Bitcoin. But we can already see that the coin days destroyed, they were also very, very high. So there was a lot of activity happening on the Bitcoin blockchain. There were not a lot of long-term holders, or the money shifted from long-term investors to short-term investors. So that's why I see all this speculation, all this activity. Once the crypto winter in 2018 happened, over here we went down by more than 80%. During this crypto winter, we see the activity declined. So all these short-term speculators, they exited the market and they handed over their Bitcoin to long-term holders. Or sometimes just somebody who bought over here, they just became a long-term holder, right? They simply held onto their Bitcoin. And so we see these cycles. The higher this goes, the more likely it potentially is that the current momentum might turn around. And so where is this currently? We see another peak over here at the beginning of 2021. And since then, we went pretty much sideways in Bitcoin, right? We moved between 30K and 60K. And currently, those coin days destroyed is comparatively low. I personally interpret this as the market is currently not overheated. There's not a lot of excitement happening. So even though Bitcoin is relatively close to its all-time high, right? It's still maybe 40% off or so, but in the grand scheme of things, it's still relatively high on this chart, right? Even though we've got a relatively high price, there isn't a lot of excitement because there's simply not a lot of all-time highs that get clocked in all the time, right? It's not an exciting rally. It's just a very, very slow sideways movement, potentially appreciation, depending on how this resolves. So if you're buying Bitcoin now, or if you're holding Bitcoin now, at least you can be relatively sure that you're not buying into any kind of hype. It's unlikely that we are going to go another 80% down from here. It's unlikely that we are in a scenario where there's too much risk in the market, at least for Bitcoin. That's how I interpret these coin days destroyed. Now let's look at something more short-term. Let's look at the short-term holder supply in profit or loss. So a 7-day moving average. And over here, we've basically got 2 points of data. So first of all, we know how much of supply is actually in short-term holders' hands. What's a short-term holder? According to Glassnode, that's somebody who has moved their coin at least in the last 155 days. Now, why 155 days? That's simply how Glassnode defines it. Based on their research, that's where they saw, okay, when somebody hasn't moved them beyond the 155 days, it's pretty likely they're going to be a long-term holder. So that's where they make the split, 155 days. And over here on the primary y-axis, we can see the percentage of Bitcoin held by short-term holders. So this is a very, very long-term chart, right? This dates back to 2011, and we can see over here the rally that happened after the Mt. Gox crash, right? This was the Mt. Gox crash. Then came the rally to 20K, and we can see during the peak, the percentage of Bitcoin held by short-term holders was relatively high, right? It was at around 42% roughly. And then with the crypto winter, the money moved to long-term holders. There was less excitement happening over here. And then again, when a new rally appears, when we moved from 20K to 60K, that's when a lot of Bitcoin was held by short-term holders. Over the very, very long term though, we see this is declining, meaning more and more people simply allocate to Bitcoin. They see it as part of their portfolio. They don't necessarily speculate in it that much. So that over the very long term stabilizes the price on a high level, right? If you simply keep your Bitcoin, if you don't sell it, then that's restricting supply, leading to elevated prices. Currently, we are again at a relatively low level, which is healthy, right? You want to buy during those kinds of levels. You don't want to buy during those kinds of levels. And so, of course, nobody knows if this is now the ultimate low, right? Nobody can really predict the prices perfectly. But it's good to get a rough gauge. If you want to sell, it's probably good to sell when there's a lot of short-term speculation, when the prices tend to be elevated. And when you want to buy, you do this exactly at the opposite times. Now, that's one of the data points. The other data point here is actually how much of this short-term holder capital is in profit and in loss. And in loss means here just in light red, in profit means in dark red. Now, I don't give too much credit, I don't give too much weighting for this short-term losses because it doesn't really significantly predict if we are really done with a bear market. Here, look at this, for example, the short-term holders, they have already been in losses at this point in time, also over here, right? But we still fell from this point in time to this point in time by around 60 to 70%. So you can't really say just because a lot of short-term holders are in losses that we are likely going to turn around. I think this metric is actually overinterpreted. Currently, if you look at the current situation, again, quite a lot of people are in losses. But as said, I would not overinterpret this. I wouldn't look at this as a potential signal for a turnaround. These elevated loss levels happen all the time, and we might still go down another 50% from here. Not saying that this is going to happen, right? But I simply wouldn't base my opinion simply on how many of the short-term speculators are currently in losses or in profits. Now, we've got way more charts to come. If you so far enjoy this video, feel free to subscribe because I publish videos every single day. And of course, if you haven't liked yet the video, that would be appreciated as well because it will help the channel grow. Thank you. Now let's come to the next chart. This is the realized cap hoddle wave. So this looks at wallets that held Bitcoin between 6 months and 24 hours. So everything up to 6 months. And it looks like a ratio of realized profits, right? So when this value here is extremely high, we tend to be very heated in the market, right? Look at this price peak over here, very high value. At this price over here, again. It seems to be a pretty good predictor as in where we might potentially peak. It's not perfect, right? It's not exactly here at the top when we peaked in Q2 of last year, but still it's a relatively good gauge. And so we also see relatively nicely bottoms over here. Those bottoms though, they tend to increase over time. So the whole volatility of Bitcoin tends to decline, right? The price fluctuations tend to decline. The peaks are not as high as in the past, and the troughs are also not as low as in the past. So this might converge in the future. Looking at the current level over here, it doesn't necessarily say that we must have bottomed over here, right? It could potentially be the case, but nobody knows. I do think that those bottoms are likely going to increase over time, but is this already the bottom or might we go a little bit more down? It's very hard to tell. And so since we can't really say these things for sure, we simply have to just roughly adjust our timing, right? We have to buy in regularly when prices are relatively low, when all those indicators tell us that we are not heated, and we have to DCA out, we have to sell regularly when this metric here increases. And so that way you don't always get the perfect prices, right? You might be selling and it still goes up another 50%, or you might be buying and it might go down another 50%, but you're roughly somewhat correct. You still take advantage of these waves. And that's in the end probably the rational thing to do, because the risk versus reward of holding your entire Bitcoin position at this point in time, hoping that it just goes slightly higher, the risk that you face over here, the downside risk versus the potential upside risk, it's not really worth it. And so at this point in time, it does make sense to already take a lot of chips off the table. Same goes the other way around, right? Being completely in cash when we are that low, waiting for it to just drop a bit further, is probably not the right choice because the potential risk isn't that high. The potential reward though is. And so your allocation to risky assets, if you regard Bitcoin as a risky asset, it should reflect these kind of metrics, right? You've got some kind of a band over here and you can simply be active in buying when we are low and be active in selling when we are high. And in the end, be okay if you don't pick the exact top or if you don't pick the exact bottom. That's totally okay. You still outperform a lot. Just buying and holding, right? Some people just buy and hold Bitcoin over the long term. They don't even try to time these waves. If you do that, you can expect around 70% or so per annum. If you put a logarithmic regression over this and you look at the recent slope of that regression, you would come to around 70% per annum in returns without even trying to time any of this. So if you do time this, you can be somewhat conservative. You don't have to do this perfectly. If you increase your annual return, say from 70% to 100%, just by somewhat being more active buying the bottoms and being more active selling the tops, if you can increase it to 100% over the very long term, right? That's amazing. Just do the math, right? You put in 10,000 US, you double this, maybe 5 years in a row, and you end up with a really nice nest egg. So that's how I see it. Don't try to overanalyze the data. Don't try to be the perfect market timer. Nobody can time this perfectly, but you can definitely take advantage of those kinds of waves. Now, this is another reason why you might consider DCAing long-term into Bitcoin, so dollar cost averaging to buy regularly into Bitcoin. This is another of those charts. It shows the balance on exchanges and here specifically for Coinbase. And what we see over here is that since the beginning of 2021, we're in a pretty constant decline over here. So less and less Bitcoin is being held on a Coinbase wallet. And I see this as a positive sign. This basically means, from my opinion, that a lot of people put their Bitcoin into cold storage. They put it into some kind of custody solution where they don't necessarily face the risk of regulation of Coinbase or where they might potentially risk getting hacked. They don't want to have direct access to their Bitcoin. They simply want to hold it over the long term. That's how I see this. If you want to sell your Bitcoin, if you want to sell it quickly on the open market, that's when this goes up. If you want to keep it and don't want to have direct access to this, simply keep this in a hardware wallet. That's when I think this is going down. And so this is positive, right? The balance on exchanges is going down, meaning the order books on Coinbase, for example, they get thinner. Less supply on the centralized exchange means the same kind of demand can afterwards push up the prices in the long term. Now, there are charts in this Glassnode newsletter that I don't find too useful, and this is one of them. I still kept it in this video. I'm not presenting all of the charts, but I want to show why I don't look at this metric too much. It gets reported a lot, and that's why I think you need to be aware of this. Very often, people talk about these spikes as in when money flows in and out of exchanges. So we can see this over here, right? A very strong outflow, a very strong inflow over here. We see these kind of spikes regularly, and we've just seen another such spike recently. Now, I don't see how this is strongly correlating to the price movements. I think this data is overinterpreted. Look at this, right? A very strong spike, not much happened to the price. If we further look at this other data here, quite a few spikes, but did really something happen with the price? Not really. Here, huge inflow. What did really happen? Afterwards, huge outflow. What did really happen? So I think this gets overinterpreted. I don't really think that this out and inflow really has a significant impact on the Bitcoin price. The underlying idea is that the big whales, right, they might be selling off, and so they transfer all their money to the exchange to depress the price potentially. But I'm not really sure if that's really, at least in this very short term, the right way to look at this. The largest whales, they anyway do over-the-counter trading, right? They do their trades directly with other large parties, maybe with large mining operations, maybe with other whales. They're not going to go directly through the order book of Coinbase, at least the very large ones. And so when you hear about news that there was a lot of net transfer from or to an exchange, don't panic sell, don't panic buy. I think the data doesn't really suggest too much of a correlation of these movements to the actual price. Now, this is a chart I very, very much like. This is the long-term holder market inflation inflation rate. Now, what does that mean? In orange over here, we've got our normal inflation rate. So what you can see here when you zoom in, you see this step function, right? This is again a long-term chart. We see the step function, how suddenly the inflation rate goes down. And we see this here as well. So this is simply the Bitcoin issuance. It fluctuates a little bit, right? Because the issuance fluctuates, the solving of those calculations in order to get a new Bitcoin, they do happen with a certain randomness, and so you get a bit of noise. So that's the first part of the graph. The second part of the graph, though, is a metric calculated by Glassnode that I find really, really interesting. It looks at the long-term holder supply. So the regular mining supply, right? The supply that gets generated by the protocol, that's here in orange. The supply provided by the long-term holders, that's here in green. So we can see the long-term holders, they are selling into the rally. The price is going up, the long-term holders sell into this. And if you annualize this, right? If you annualize the net selling of those long-term holders and you calculate this as a percentage of total supply, you get to these percentage numbers. So that's interesting, right? During some periods of the market, the long-term holders are buying up the inflation. During other times of the market, they're even creating more inflation, so to speak, because they're just selling off their holdings. And so this way we can really see what the smart money is doing. And I think it makes a lot of sense to simply follow the smart money. Just do what the smart people are doing. Sell off, sell into the bull market, take your profits, and then accumulate when prices go down. That's how you can time this. That's another way to look at this. And so when we look at this 2021 top, we again see the long-term holders, they sold. They added to the already existing inflation. And that's what's actually really driving the price here, right? A lot of people talk about the stock-to-flow model and how the reduced supply of Bitcoin will drive up the price. And it is an impact, but the real strong impact that makes all of these price fluctuations possible, it is short-term attention by the short-term speculators in combination with the long-term holders that simply sell to those speculators. And so when this here is going down, then you want to be on the buyer side, especially when we are below the natural inflation, right? That's when people buy up the inflation. And you want to be on the seller side whenever the long-term holders are selling off. And so currently, the issuance of Bitcoin is 1.7% per annum, right? That's the inflation happening through the mining. And the long-term holders, they are currently buying up at a rate of 7.8% per annum. So we have net buying pressure over here. So if you wait for long enough, right? If this green line here stays for long enough below this orange line, we will get more and more Bitcoin accumulated. Bitcoin will drift up over time simply because it gets bought more and more. So the nominal inflation rate is 1.65% right now. The long-term market inflation rate, the long-term holder market inflation rate is minus 10.9%. And thus, when we take this in relation to one another, the long-term holders are currently buying at 7.6 times the pace that Bitcoin is currently issuing supply. So the demand outstrips the supply by the long-term holders. And so it's just a matter of time, in my opinion, until this is also reflected in the price movements. Of course, the short-term holders, they have impact on the price, right? Quite a bit of impact, a 50% drop. But if you have long enough of a time horizon and if the issuance is less than 1/7 of the long-term holders' demand, and of course, over the long term, I think the price will trend up. Now, if you're interested in more detailed analysis and especially in more regular analyses, I've got a daily market update on Bitcoin, on Ethereum, on various altcoins. I also share my trades over there. I've got more quant analyses in terms of what's the best technical indicator, etc. So feel free, if you want to dive deeper, to look at the bitcoinstrategy.com, the premium membership over here. The link is also in the video description. Last but not least, if you haven't yet joined our Telegram channel, this is where you find us. Simply search for Bitcoin Strategy channel within the Telegram app. See you next time. Bye-bye.